So now that we've saved the taxpayer, you'll notice that the summary pane has opened up, and that means it's ready for the financial information. All right. So next to the taxpayer tab, you will find something called Capture Financials, where we'll be entering in all of our tax information there. All right. So once you've clicked on the Capture Financials page, this will open up. It will say source documents, 0, and you'll notice that there's no calculators available anywhere on this screen. All right. There are calculators available on this tab. I just want to show you guys. If I click on that, it's going to bring up a medical calculator, but there'll be no save button at the bottom. Now, this is because it is absolutely crucial and important that a source document be added before proceeding to capture any financial information. In fact, you won't be able to capture any financial information should you not enter or add in a source document. So let's go through that. Adding of a source document, quite simple. There's an green add button that you may click on that will bring up the source document page. All right. So here you are welcome to enter in your company information, your certificate numbers, the PAYE numbers that you are employed, your employer has, and the period from, to, and you may also select the document type, which will either be an IRP5, an IT3A, or other. All right. Now, I know that John is not employed. John is not employed and he does not receive an IRP5 certificate. In fact, John only has capital gains and he has interest income with a deduction of medical aid. All right. So he's not going to have an IRP5 or an IT3A. So I'm going to select other for him and fill in addresses if you have it, and you're good to go. So I'm going to leave the company name, certificate, description, PAYE number all blank. I'm good with my period. It falls within the financial year. I'm going to save that. Now, once you've saved the source document, you'll notice this screen opens up with the income page, deduction page, control codes, and tax codes. All right, with a list of calculators on your right, all in blue. All right. Now, before I move on, I just want to let you guys know that we know that many people get multiple IRP5s throughout a financial year. And here we are allowed to add as many source documents as we need. So I'm just going to show you guys that. You'll notice that there's now 2. As I've added in the separate one. So you're allowed to add in more than one source document. Okay. So now I'm just going to demonstrate a few calculators just to show you guys the easy, friendly feel of it, and also their reporting that will come with it. All right. So I know that John has interest income from his bank. So I'm going to select the interest and dividends calculator in blue on your right. All right. So once I've clicked on the interest and dividends calculator, it opens up this page for me. All right. The first thing you will need to do here is enter in the description. So I know that it came, his money, his capital money was there for investment purposes. So that's going to be my description for my purposes. All right. And then with recording interest or dividends, you need to know if it's local or foreign because there's different tax implications for that. You need to know if it's either an interest or dividend, local or foreign, all right? So I know that John had local interest, which he received from F&B. So I have selected local interest. All right, very nice and easy. Where did he receive it from? He received it from an investment fund. What was the capital amount? I'm unsure what the capital amount was. So right now I'm just going to put in the interest amount collected. So John had accumulated interest income in the year of 100,000. And like I've mentioned in the beginning, we're not sure if John is married in community of property. So at this moment, we're just going to, as you can see that the spouse is grayed out. So if I had clicked on married in community of property, this will be open. And as many of you know, you're taxed, if you're married in community of property, you're taxed on half of your interest, half of your CGT of your spouse, all right? And vice versa. So I'm just going to save this because this is all of the information I have, and saved. Again, a green little pop-up on the right-hand side of the screen to say it was successfully saved. And here you can see the summary pane has now changed to include the interest income. All right, that's great, nice and easy, very simple to use. Okay. So I'm just going to show you another calculator. As I mentioned, John also had capital gains. All right, so I'm still on the income part of it. So I'm going to click on capital gains, and then it brings you a nice bright calculator on the screen that you will see. And again, very simple to read. You're going to first have to fill in the description. So John sold one of his properties that he had previously rented out in the year. And I'm just going to fill in the description, which is the address of the property he had sold. The asset type. Like I've said, John had sold an investment property, which means it will not be a primary residence. So you're just going to ensure that you know exactly what was sold to incur this capital gain. All right. So we have immovable assets, primarily financial instruments, listed, unlisted, intangible assets, and so forth, right? So there's a nice long list over here for you to select of what was actually sold for the taxpayer in the year of assessment. So I know that John had sold an investment property, so I'm going to select immovable assets. Okay. The date purchased of the asset. So I know that John purchased this in the beginning of the financial year, which was actually on the 2nd of March, 2024. All right. The proceeds. So the proceeds is what John had gotten in return of the sale. And John had sold the property for 2 million. Okay. And obviously there was a cost involved in purchasing the asset, and John had paid 1.5 million for this asset when he had purchased it in March 2024. Okay. Then you're welcome to add in the market value, should you have that on hand. You're welcome to select if this was local or foreign, commercial or residential. All right. So I know that was a local immovable property that he had sold, and I have selected local. Okay. The date sold of the property. So John was a bit smart. He actually sold it within the 2025 year, and that was in February 2025. Okay. So when you dispose of an asset, majority of the time, there's selling expenses to that asset, which SARS allows you to make a deduction against your capital gain. All right. So John has had some expenses incurred in selling of the property. So I need to record that. This will be grayscale. You will have to click on the edit button to capture your expenses, your selling costs. All right. So I know that John had to pay agent's commission in order to sell his property. You're going to select the cost type, which is selling expenses, and he had paid in 100,000. All right. So this will have to be saved by clicking the add button. You'll notice once we've clicked on add, the expense is now saved. You'll see the description, the amount, and the type that was added, which we are under selling expenses. He also incurred expenses for rates at the time of selling the property, which was 5,000 Rand. And I just want to show you guys that you can add as much expenses possible according to how you would like to break it down and so on. So now that I've saved those two expenses, I'm going to close that. And you'll now notice that the selling expense is 105,000 Rands for John. All right. Cost before 1 October 2001, cost after October 2001. So we know that this property was purchased in 2024. So this, for purposes of this taxpayer, this is not necessary for me. And loss carried forward, if you do know an amount, you may fill it in. Moving over to the bottom of the screen. Again, if your client is married in community of property, if you're working on a deceased individual or a natural person, it will be indicated on the left-hand side of the bottom of this calculator, and you'll see the relevant option is ticked there because John is a natural person, all right? Then you'll notice that the calculator has given you the gross gain and the taxable portion of your gain, which is your inclusion amount to be taxed, all right? So now that I'm happy with this calculator, I'm going to save. A little green pop-up again on the right-hand side of the screen that was successful. Under my income page, I now can see the local interest that John had collected in 100,000, as well as the local capital gain that John has gained in the year of assessment, which is 395,000, okay? We're just moving over to the summary screen over here. You'll notice the gross income remains at 100,000 and the capital gains taxable portion has now been included on our summary pane, all right? Giving us a total taxable income and so forth. So I'm just showing you guys that the income is now reflecting there. We'll just go through this roughly just now, as I need to add in a medical deduction for John, okay? So to add in a medical deduction, you'll click on the medical aid calculator and it will bring up a nice bright calculating screen for you, ready for your information to be filled in, okay? So we're first going to go with the description or which fund it was held with and the membership number. The taxable income will show per what you have on your summary screen thus far, all right? And your date of birth will pull through. So John had contributed monthly to a medical aid scheme, and he had contributed for himself and his wife. So that will be 2 people in total, all right? Now, John has also contributed to medical aid for 2 people throughout the year of assessment. So I'm just going to use the quick, easy button that auto fills in the rest of the months for me, all right? And that gives us a nice Section 6A credit breakdown and the total over there. So now we're ready to add in the contributions. So John contributed 82,000 in total, and there was no employer contributions, all right? So that's nice and easy to be filled out. This can be filled out directly from the medical aid certificate issued by the medical aid scheme that your taxpayer or you will provide or have upon calculation of taxes. Expenses not recovered. So you may fill in if there's a disability within the dependent, you may fill in your out of pocket expenses as well as physical impairment or other medical aid expenses, which would have been your medical aid out-of-pocket expenses not covered by medical aid, all right? So now that I've had that information filled in, I'm just going to quickly save, all right? So you'll notice the green pop-up saying that we have successfully saved the calculation or the input, and you'll see under our deduction tab, right over here, that medical aid with the contribution amount now reflects, all right? You'll also notice the tax page which now has the medical aid credit for the contributions in the year of John. All right, so that will be your section 6A credits. And this is how your working page now looks. So remember, I've opened up two IRP5s. I just want to show you guys that I've been capturing under the second one. And I just want to click on the first source document that we initially added. And you'll notice that it's blank. Like I've said, this is here for purposes, you can add in multiple source documents for purposes of multiple IRP5s. Okay, so I'm just going to delete that one. You can delete it very easily. Done. All right, clicking on that again. Now we have a breakdown of our income and our deductions, as well as on the summary pane. Okay, so I just want to quickly show you guys that if you've captured multiple sources of income and you're now just working with the summary pane because it's a bit much to look at on your income side. I know that a lot of tax practitioners and taxpayers have multiple sources of income, and we now want to, we see a figure that's not looking too good for us, and we now want to see, wait, what is this made up of? So I'm just going to click on the little info button there that brings up my breakdown of that amount shown on the summary pane. All right. Now, I think that's a very good feature to have. It's nice and easy. It's easily accessible. Instead of scrolling and calculating, you know that this is our summary total. And this is what the information tab gives you. So now, should I have had more than one source of other income, it would have been listed here as well. All right. So I'm just going to quickly close that, as well as your exemptions and deductibles. All right, so I just want to click on that. Why is this exemption here? Just going to click on that. Okay, so it's the interest exemption. We all know 23,800 is the exemption for a taxpayer under 65 in the year of assessment currently. And I know that is correct. All right, so it gives us a nice little summary of all of the relevant taxable or tax framework on your right-hand side. Okay, I really like these. I think it's very useful. Like I said, very easy accessibility. Okay, so now I've contacted John, and he's asked me for the reporting, as well as him advising me that he's actually married in community of property. So when he advised me that he was married in community of property, I instantly asked him about his spouse's income. Like I've mentioned, we are taxed when we are married in community of property, we are taxed on half of our spouse's rental, capital gains, interest, and dividend income. Okay, so now that I know John is married in community of property and I need to change, which means my calculation will change because local interest and local capital gain is split between spouses and then taxed. All right. So I'm going to go back to the taxpayer data information, and I'm going to scroll to the marital status, and I'm going to click on married in community of property. All right. And once you've clicked that, because we know John is married in community of property, we're now going to save this. Now, before I save, I want you guys to just grasp the 100,000 and the 142,000. All right, that was fully taxed under John's income tax profile before we knew he was married in community of property. Save. Green pop-up again on the right. And you'll notice our summary pane has changed. The figures have changed, all right? So I'm just going to click on Capture Financials again, click on my source document, and you'll notice the change on the summary pane. You'll notice the change here on the local interest, all right? So I just want to show you, if I click on the interest and we go to edit the calculator that's now split. Sorry, I just want to do that. Edit the calculator that's now split. Automatically, it splits the local income for us, which will be 50,000. As you recall, it was 100,000. Now John is only being taxed on 50,000. Great. I don't have to go back and recapture my information. I just need to go back to my taxpayer data and tick on the marital status of being married in community of property. So there's no redo to be done. It's a click of a button and saving of the taxpayer. All right. I was a bit concerned that I needed to go back in and recapture the financial information, but look what Taxplanner Cloud has offered me. All right. So it's great. I'm happy with that. John, I now need to present my taxpayer report to John, and he also wants a breakdown of all of the amounts. All right. So let's say that we are complete with our calculations for John, and I now want to send him the calculation breakdown. Oh, wait, but before I go there, I remember that John had paid in provisional taxes throughout the year as well. All right, so I need to record that because I see on my summary pane, I haven't actually recorded that. Under tax paid, it's 0. And I know that John had paid in provisional taxes. So let's quickly move on to the tax paid tab. All right,